So most of all, we'll be talking about about the wonder of the compounding factor, how leveraged instruments can make an account growth, and of course, it also has the risks associated with trading. And so the compounding power of micro contracts, I have selected a starting balance of $1,200 for one micro contract. So probably most of you know that one micro contract is 1/10 of a mini contract. And the contract like NQ for the NASDAQ is my preferred instrument. But of course, you could apply this to any other instrument, whether it be the ES, the S&P 500, or the Dow Jones, crude oil, gold, etc. But my trading has been in the past 2 years only on NASDAQ. And so the potential growth over time as the strategy grows one micro contract. So I'm a little bit stumbling on the word here for micro contract, not mini. So the one micro contract at a time until we add enough, let's say 10 micro contracts to make one mini contract. I don't have the specific balance growth on a spreadsheet, which would be nice for you to view. However, there are some limitations due to compliance on presenting that to a live audience. But after the webinar, you can email me, or if you are already on my email list, I will send you the Excel spreadsheet that you can check this on your own and simulate your growth of one micro contract. And for my example, why just one micro contract? Well, that's for $1,200. But if you want to start with $2,400 or $3,600, then actually you could trade 2 or more micro contracts. So one is just for simple math as a common factor that everybody can understand. And one micro contract, because it's a basic unit of reference that you can then build either from trading your account growth or for starting with the higher balance of your own capital, or as in my case, and many of the people who follow my Discord and use my strategies on prop firms trading accounts. And in the past, I have covered the subject of prop firms, but today we will not be covering prop firms per se. So the big challenge is the maintenance of steady growth. So of course, when it comes to growth, sometimes some months you will get 2 or 3 times what the average that I am considering for this example, for this simulation, which is $200 of net capital gains per month per micro contract. So some months you may get 400, 600, but some months you may have loss. So the idea overall here is shooting for $200 per month per micro contract. And then once you achieve $1,200, then you would add another micro contract and another $1,200. So initially it takes a long time to build up. So at $200 per month, you would take about 10 months to grow to one mini contract, which would be 10 micro contracts. So it takes patience, but the biggest factor is that we don't know about the maintenance of the steady growth of the underlying strategy. Why is that important? Because realistically, with ever-changing market conditions, retail trading strategies with our algorithms tend to lag market shift in the market conditions. And so what to do about it? In the past, I have put together several strategies to cover several aspects of the market. Let me go one slide ahead here. So in the past, I used to put a lot of strategies to trade in the same account with trend pullback, reversal, counter trend. But that still did not really give me the balanced results that I expected. So now, for this purpose, and in the past month, I shifted to one single strategy, price action.